What's going on, guys, and welcome back to another video. So hyperinflation is here. I know a lot of people have been saying that no, we are not going to see hyperinflation. The inflation that we currently have is transitory, it's only temporary, but it's going to peak and come back down. And you're right, it is going to peak eventually, but we have some statements today that the Federal Reserve Chairman Jerome Powell gave us, and these statements are big. Here are some of the things that he said. He stated, if the Federal Reserve needs to raise rates faster, they will. Well, that's going to be very tough for people that are trading in the stock market, right? Any investments. If you're looking at buying a home, it's going to become more expensive. The amount of money, your buying power actually gets reduced, which means it's harder to find a home, right? Debt becomes more expensive. These are issues. He also stated, if interest rates needs to be raised by 50 basis points, they will. He made it seem like, this was last week though, was that the Federal Reserve is going to raise rates by 25 basis points every single meeting. And it's probably going to go anywhere from like 7 to 17 times where they will just continue to raise rates. He made it seem like if they have to go to 50 basis points, so twice what they were pretty much recommending or suggesting, they'll do it. They're not going to stop. He also admitted that the Fed must be more aggressive in regards to controlling inflation. So pretty much what he's saying is the Federal Reserve messed up. We are kind of seeing runaway inflation or hyperinflation, if you will, and this is causing many concerns, which the Fed needs to get on top of as quickly as possible. He also stated that inflation, and get this, inflation that we are seeing right now at 7.9%, this was supposed to be the peak of it all. Well, here's what you need to understand. Inflation at 7.9% was what, according to a lot of reports, is what we were expecting, about 8% inflation. This was going to happen in March. Well, the inflation report that we just got at 7.9% is for February, so 1 month behind. But here's what you need to keep in mind. This was all predicated on stuff before the Russian invasion into Ukraine. And according to the Federal Reserve Chairman today, that this invasion into Ukraine pretty much blew everything up. So it is not that we are going to see the peak of inflation right now in March or even April. The expectation from the Federal Reserve is that we will see peak inflation during Q3. This means July, August, or September. One of those 3 months. But again, we don't see the inflation data come out until 1 month after, which means we might not see the reports until either August, September, or October. Okay? Keep that in mind because that is very scary. Now, Federal Reserve Chairman Jerome Powell also made it very clear that inflation will likely moderate in Q4. Okay, so again, that's what, October, November, December. But then it will start to decline in 2023. That's good news, but it's also very delayed news. This is stuff that we want to see now, but we might not see the end of inflation for almost another year. Okay, so that's an issue. Now, here's exactly what Federal Reserve Chairman Jerome Powell said today. Okay, I want to take this piece that he said because I think this is extremely important. He says, and I quote, "We will take the necessary steps to ensure a return to price stability. In particular, if we conclude that it is appropriate to move more aggressively by raising the federal funds rate by more than 25 basis points at a meeting or meetings, we will do so. And if we determine that we need to tighten beyond common measures of neutral and into a more restrictive stance, we will do that as well." So essentially what he's saying is it's not just in one meeting that the Federal Reserve might raise rates past the 25 basis points. They may go to 50 basis points. They may even go higher than that if they need to. And it could happen in one meeting, 2 meetings, or multiple meetings throughout the next year. But essentially what he's saying is if the Federal Reserve has to cause a recession, they will. Now, I don't expect this to happen, but if we continue to see hyperinflation, and more so we see runaway inflation, where it's either we continue to see inflation just out of control, or we cause a recession, which is going to mean people are going to lose their jobs. People will lose their homes. The economy is going to turn backwards. But if that's what we need to do, then that is exactly what the Federal Reserve is going to do to create price stability. Now, what does this mean for you and I? Well, this means hyperinflation is already here. We are going to see the next CPI report come out, and when it comes out, it's going to look like things are out of control, especially in certain areas. This is mainly going to be in energy, okay? Especially after this Russian invasion into Ukraine that happened, almost in the past month. But this happened before the CPI report came out for last month, so you need to keep that in mind. Okay, that what we're going to see in this new report that's going to come out in like 2. So we got 2 weeks. I think it's about 2 weeks. This is going to come out. When this comes out, 2.5 weeks, this could send the entire market into a frenzy. Not just the stock market. This could cause everything to just really go crazy. Okay, so just keep that in mind and be prepared for higher prices. This is likely going to include things like rents, mortgages, cars, retail products, utilities, debts, pretty much everything in between. This year is going to be even harder for those that are on fixed incomes and lower income households. Okay? And just understand, when the Federal Reserve says this is only temporary, the Fed is likely talking about temporary as a 9 months or even an 18-month span. So temporary doesn't mean next couple weeks or next month. It could mean almost a year or a year and a half in. Okay? But one piece of advice I have for every single person out there, if you're on a fixed income or you are a lower income household, one of the things that you need to do, which is extremely important, you need to figure out ways to save money, okay? Cut unnecessary expenses and make a little bit extra money on the side. Those are the 3 things you need to do. Because if we continue to see inflation and products are costing more and more every single day, week, month, right, or even year, what you need to keep in mind is you have to have more money on the side. All right? If you have any questions on how to do that, you need some advice, some tips, let me know. You can always ask your questions down in the comment section below. But this is serious. This isn't just, oh, inflation's here. Great, we're going to see a little bit more. No, the expectation is it could get much higher and much worse because we still have months to go. It's not just the peak maybe next month. We're still a few months away. So just keep that in mind as you're making your daily purchases. You're trying to save money. You're investing, right? Your financial situation. What happens over the next 3 to 6 months, in my opinion, is going to be critical for how you live over the next, potentially 2 to 5 years. All right. So again, if you have any questions, let me know your questions down in the comment section below. Just want to thank you guys for watching. Have a wonderful rest of your day. Consider subscribing. And like always, go ahead and hit that like button if you enjoyed today's video. And I'll see you guys on the next one.